Welcome back everyone to the Money Control live stream. You're watching Markets with Santo and CJ. Yes, we had to bring Santo back because you guys were missing him so much. Now, Santo, we had to pull you out of your bed and get you to office. Well, that's it. It's been a very volatile session overall in general, Santo. I mean, just like yesterday, the market has been oscillating between gains and losses throughout the session. At this point of time, sitting somewhere near the flat line. So clearly, it seems like directionally the market has lost its way a little bit. It seems like people are unable to decide which way the market should be headed at this point of time. Global cues also remain sort of weak. US stock futures were sort of negative at this point of time. Asian markets were a mixed lot, as well as the European markets. And overall, I think, Santo, if you look at it as a setup from tomorrow's perspective, I just have a feeling that probably tomorrow we could see some bit of short covering coming into the market, given the fact that there is a expiry of the monthly futures contract or the Nifty tomorrow. And generally, before that expiry, you tend to see some covering of positions. And maybe given the fact that there has been an additional short position in the market over the past 2-3 sessions, maybe we could be in for some covering tomorrow.
Well, CJ, once again, I think it seems to be a case of recency bias at work, because despite the steep fall in the market in the last couple of trading sessions, you're seeing that in general people are still willing to bet on the upside, because they've seen some very sharp rebounds in the recent past, and the widely held theory still is that things are looking okay, and after a short correction, market will once again continue to climb higher.
I think, Santo, the fact that we could not take out 18,000 in this rally from 15,182 clearly has put to rest this argument whether this is a new bull market starting. I think clearly we are still in that consolidation phase that we have been seeing for the past 8 to 9 months, and I just feel probably that maybe according to some technical analysts out there who probably of course are more knowledgeable than me, they're of the view that clearly it seems like the pullback at this point of time has exhausted itself after an 18% up move from the June lows.
Well, also, the global signs are not looking too encouraging at this point in time. If you look clearly, US, Eurozone, China, all are seeing a marked slowdown in economic growth, and at some point it's bound to catch up with India. But till then, probably, I think most investors would think that in the past we have managed to outperform global markets, and probably the trend could once again continue.
Well, Santo, having said all that, the only thing that keeps me optimistic about this current rally or pullback, if you may call it, is the fact that when it started, sentiment indicators across the world were probably at the lowest that they have been. In the case of US, in fact, some of the sentiment indicators were as low or even lower than they were during the great financial crisis back in 2008, 2009. So clearly, if you're a person who bets on sentiment in the market, I think with those sort of bottoms being in place, you would generally bet that the rally that comes after that would be a long one. And I think probably a lot of investors out there also playing at the same thing, that the fact that sentiment had become so low in the market that if any sort of pullback happens, I mean, we saw that in March 2020 when sentiment was at rock bottom, and then we had a 1.5 year bull market, and maybe people are playing at the same sort of an event happening or unraveling over the next 12 months.
Well, that's it. Let's quickly look at the stocks on our watch list this afternoon. CJ, starting with Berger Paints. The stock has a good run, and now that seems to be reversing. The first quarter numbers were strong despite the widely held, despite concerns that probably the numbers could be lower than expected. Still, the company has managed to beat expectations. Its outlook is promising. It has said that raw material prices continue to ease, and it's managed to report good growth in its key segments. So mainly the cushion from falling raw material prices should improve margins. But CJ, there's another factor at play here. Clearly, the company is also investing heavily in expanding its dealer distribution network, increasing the number of tinting machines at its dealers, and also it's investing heavily in brand promotions now, given that Grasim is slowly going to up its game, and Grasim too had made it very clear that it's initially aiming for the number 2 position. So that really puts Berger Paints situation slightly iffy. So that concerns now once again seem to have surfaced, and which is why you've seen a sharp sell-off in the stock over the last 1 week. It had a good run-up, but now my gut says that probably the stock could now underperform in the short term.
I think, Santo, of course, a lot of the movement in paint stocks in particular, and of course some of the other stocks as well, which are dependent on crude oil, has been driven by what is happening to crude oil prices internationally. The up move that we have seen over the past 1.5 months has been driven by the fact that crude oil prices came down from what 125 to almost $91 per barrel not so long ago. The recent up move in oil prices has, I think, dampened the sentiment a little bit. But if you look at it from a sequential basis, one would expect that cost pressures should start easing on a sequential basis, at least for the company, and that should, of course, add to the margin resilience that the company managed to show in the June quarter. Apart from that, as far as demand is concerned, Santo, I would not be so worried about investing in your brand, investing in the market distribution network, because that is something that is for the long term and will hold the company in good stead going ahead. But also I would expect some sort of demand uptick happening for the company in the festive season coming up, generally because festive season is where you see a lot of renovation activity happening across households in India, and you would expect Asian Paints, company like Asian Paints and Berger Paints, who are number 1 and number 2, to benefit from that sort of a tailwind. So I think September quarter, December quarter probably would look quite good from a sequential basis. But yes, we will have to wait and see what happens to the outlook and whether market will appreciate that and lead to a re-rating in the stock going ahead. Well, one stock where clearly there are no such concerns is JK Paper. The stock rallied again today on buzz that there's a possibility that paper companies might hike prices yet again from September onwards. Now, already JK Paper had a stellar June quarter earnings. If you look at sequential numbers as well as year-on-year numbers, the growth was quite spectacular. And with the price hike coming in again in September, Santo, you will expect at least 1 month of that price hike to add to the margins of the company in the September quarter. Overall, the stock has been one of the best performers this year in the market, and overall, the growth outlook still remains quite strong given the fact that paper demand is on the uptick led by e-commerce. Also, the ban on single-use plastic is also adding to the growth outlook for paper industry in general. So overall, it's a growing industry where growth has clearly cyclical growth has clearly come back, and at this point of time, JK Paper, being one of the leaders in the industry, would be the best bet to play with.
Well, clearly, CJ, I wouldn't argue against a stock with such strong fundamentals there. Usually, I'm not a fan of paper stocks, but in this case, if you look at over the last decade or so, the company has really rewarded investors, and how. It's been a multi-bagger, not just decent returns, but some very strong returns there, and that trend looks to sustain also, as you can see from the latest quarterly numbers, which have been really strong. Company has managed to hold on to margins as well, which in this environment is saying quite a bit. And from what you have said,
you sound so impressed by me, Santo.
Yes, indeed, indeed. So as I said, when the fundamentals are strong, there's no point in making an argument just for the sake of it, CJ.
Yeah.
Well, next stock on our watch list is Abbott India. Now, a wrong day to be speaking about pharma stocks in general, because overall pharma stocks are under pressure.
Taking a beating today, yes.
Yes, definitely. Right from the start of the day. But this is one pharma stock where the play is more domestic rather than the global markets, and that's what makes it a little more attractive compared to most of its larger peers, which are facing severe pricing erosion in the US. That does not seem to be the case with Abbott India. And during the June quarter, the company managed to come out with a decent set of numbers, and according to analysts tracking the company, the heartening aspect here is that it has managed to do that post double-digit growth despite some of its key brands coming under severe competitive pressure. Dufastone is one of the flagship brands of the company, and that saw some bit of pressure during the quarter, but still overall the company managed to do pretty well. CLSA has upgraded its price target for the stock. It now has set a price target of 22,510. Elara Capital is the other brokerage which is quite upbeat on Abbott India. It is hopeful that the company will be able to meet its target of scaling up both its consumer health business as well as vaccine business. Consumer health, the target that the company has set for itself is $5 to $7 billion, so 5 to 7 billion rupees over the next few years, and for the vaccine business also it's looking to scale it up to close to about 5 billion.
Well, Santo, clearly it's been one stock that has been performing within the pharma pack. Clearly, not only Abbott, I think even if you look at some of the other MNC pharma names, they have been quite in demand recently. These stocks had fallen out of favor, about a year or so ago, because a lot of the API players and export-oriented Indian manufacturers became a favorite. But if you remember, MNC pharma companies had seen a similar sort of rally back in 2018, and there was a lot of buzz about preference for Indian players compared to export players. So these are stocks that keep falling in and out of favor with investors. The good part about a lot of these stocks is that dividend play is always there. You tend to get a good amount of dividend, but I'm just not sure how long term the stock performance or the upside could be. Tactically speaking, it looks like a very great bet at this point of time, at a time when the export sector or the export market for pharma is not doing that well. You intend to focus more on India plays, but I think from a longer term point of view, I think still export stories in pharma would still steal the money compared to an India focused company like Abbott India. Well, last stock on my radar today is Visaka Industries from the textile space. Now clearly this has been one company that has been in the news over the past 1 month. After what was very surprising and spectacular June quarter earnings. If you look at the stock performance for the past 1 month, the stock has risen close to 18%, outperforming most of the broader market out there. Now the management's outlook is quite bullish. Even in the con call, when it happened after their earnings, they sounded very, very bullish on the growth trajectory going ahead. And even today, in an interview to CNBC TV 18, they outlined some of the numbers that they expect. They're expecting about 20% growth in their textile business, expecting overall business to grow about 10 to 15% in FY23. So clearly, the growth outlook is very strong. But the most heartening thing from Visaka Industries that came out from that conversation is the fact that the management is of the belief that they can expand margins this year, which is a very, very tough thing to do, in a global environment and a domestic environment like that we are currently facing, where raw material inflation has just become so ubiquitous. I think expanding margins and expanding profitability ought to be rewarded quite kindly by investors, and I think we can see that in the stock performance, Santo.
Well, just one quibble here. Of course, there's been a sudden interest in the stock over the last few trading sessions, huge volumes as well. But the stock is still off its highs, which it touched in
October.
Is
about 17% high off its 52-week high at this point of time.
That is one. And if you look at the overall growth in top line over the last 5 years, even adjusting for the COVID year, you would see that both 5-year and 3-year basis, the growth rate in top line is a very tepid 8%, which is not much. Now, granted that textile industry has seen a big upswing in fortunes only in the recent past, but then you have enough companies which are doing reporting growth rates much higher than that.
I think, Santo, if you look at it from a historical point of view, you're bound to be a little skeptical about whether this new growth will sustain or not. But I think after many quarters, you saw the sort of commentary that came out from the management. They are investing in new avenues within their textile business as well to make it more modern, make it more technologically savvy, and I think a lot of analysts have bought into that story, and clearly even investors, some of the HNI investors, you talk about the volume jump that you're seeing. I think a lot of that volume jump is being led by some of the HNIs out there who are probably getting into the company in the hope that this could be another multi-bagger story going ahead.
The last stock on a watch list this afternoon is Godrej Consumer Products. Now, CJ, the stock has been an underperformer for much of this year, but last couple of months slowly, I think the fortunes appear to be changing. It rallied more than 15%.
Yeah.
Morgan Stanley has given a double upgrade to the stock. It's changed its rating from underweight to overweight, has a price target of 1100 rupees. Antique is the other brokerage which is bullish on the stock, has a price target of 1000. Now, what is really changing for this company at this point in time? One is that there's been a significant cooling off in palm oil prices. That's one. The management is a little more hopeful about its India business volume growth, which has been slightly flattish during the first quarter. Management is hopeful that it can post about a mid-single digit increase in its India business. Also, there's some improvement in its African, US and Mexico operations as well, particularly in the African business. The company is hopeful of double-digit volume growth with an increase in margins. So, and Morgan Stanley's argument at this point in time is that a lot of growth levers have already been put in place, and what you're going to see is the start of a long-term re-rating cycle which will start from next year. You're seeing some bit of it in the stock price already, CJ.
I think Santo, similar arguments were probably made last year when the new CEO was appointed for the company, and everybody was.
He's the one putting all the growth levers in place.
Yeah, probably. I mean, probably it's been almost 1 year, and at least we have not seen that at least come forth in the earnings of the company.
Tough business environment.
CJ. They have a tough business environment. I get it, But I think, Santo, a lot of the optimism that we are currently seeing seems just like a mean reversion on the valuation play, sort of, because valuation have been so depressed that they are expecting some bit of mean reversion to happen there on the stock. But overall, if you talk about fundamentals, the domestic demand scenario is what really troubles me, because the fact that volumes declined almost 5% in June quarter for the company in India, in the India business, where some of the other peers in the FMCG space actually ended up putting out very resilient performances out there. So that concerns me a little bit. Whether they'll be able to turn that around in the coming quarters, it's anybody's call, but clearly the market hopes that they can. But I'm a little skeptical about that segment. Apart from that, of course, margins is something that probably could, the revival, of course, is expected in the second half. But that revival could be a little muted given the fact that the company is investing quite heavily into a lot of its brand marketing and distribution network. It is trying to make sure that it catches up to some of the bigger peers in the industry at this point of time. So clearly, hope is that the new CEO will be a transformative change. But I think now it is time for the new CEO to also start delivering on that hope. And I think any re-rating will depend on that delivery.
Well, with that, let's take a quick look. Recap of the market, and market has managed to hold on to its early gains. Nifty above 60, holding still about 17,600, up about 34 points. But clearly, CJ, the mood now appears to be a little cautious.
Yeah, it is. I think, Santo, and of course, we have the expiry happening tomorrow. So I think nobody would try to venture too much into a bullish bet or a bearish bet, because you never know what can happen with the expiry. If you look at, I think, Santo, the most heartening part about today's session is the fact that the broader market has been able to do quite well. At least it shows that risk appetite in the market has not really dimmed despite all the concerns globally. If you look at the Nifty small cap 100 index, it's higher by about 0.9%. Nifty mid cap 100 index is higher by about 0.8%. And surprisingly, the India VIX is down about 4%. So that goes to show that there are not too many bears out there trying to, put their, head ahead. The shoe in and try to take call on the market falling tomorrow. So I think overall the setup for tomorrow also looks quite good from my perspective.
And what are the things that we should keep an eye out for?
Well, Santo, of course, the expiry of the August derivative series tomorrow would be something that will be on the top of the mind of investors. So that is something to watch out for. But apart from that, the US July durable goods order data will come out later in the evening. That is something that probably could move the market in the US, because it will be another indicator on how the US economy is doing. But of course, for the market, not only at home but globally, the most awaited event is the Jackson Hole Summit that will start on Friday, and everybody is keenly awaiting what Fed Chief Powell has to say about that. Because let's not forget, a year ago, it was this summit only that set the tone for the Fed rate hikes, and it set the tone for market to start, factoring in what kind of rate hikes, what will be the pace of rate hikes that the government or the Fed central bank will put in, because the market topped out only a month after the summit last year. And it will be interesting to see whether we have, because we have seen this rally, almost 17% jump in S&P 500 from the mid-June lows, almost 18% jump in Nifty. It will be interesting to see whether a similar sort of, history repeats this time around.
Well, we have a query from a user, Abhishek Ranjan, asking about Astra Microwave, and should one remain invested? CG, any thoughts on that one?
I think, Santo, it's been a decent stock overall. So overall, I think there's not been too much of bearishness on this counter. Analysts have also, in general, remained quite optimistic on this business. If you look at some of the mutual fund activity, also, Santo, this has been one stock that has also attracted a lot of mutual funds over the past few years. So clearly, this is one stock, especially from the aerospace and defense sector, that already has been, quite in news over the past 1 year. A lot of defense stocks have been doing quite well, and the order outlook or the order inflow outlook for Astra Microwave also looks quite decent.
Expensive stock, I would say.
That it is,
68
yes.
times trailing 12-month PE, and it has had a fantastic run up also. So I would say that one should be a little cautious here.
Yeah, I mean, of course, you could take some profit, do some profit booking from time to time. But I think this is one of those plays where probably every correction will be utilized or seen as an opportunity to do some bargain buying going ahead.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thank you for watching, and please do share your thoughts on the show in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com. and download the Money Control app. We'll catch you again live tomorrow morning at 9 a.m. Yes, this time both of us, not just me. We'll catch you tomorrow, and till then, have a great day.